something just happened in Washington that could completely reshape the future of crypto in America. And XRP investors everywhere are suddenly asking the same question right now. Did the US Senate just change crypto forever? Because honestly, the energy across the entire crypto market feels different after the latest discussions surrounding digital asset regulation, institutional adoption, and the growing push for clearer crypto frameworks in the United States. Social media exploded overnight. Crypto influencers started posting nonstop. Institutional analysts suddenly became more optimistic, and XRP supporters immediately began connecting the dots between regulation, ETFs, institutional liquidity, and the long-term future of Ripple. Now, before we go any further, let's make something extremely important clear immediately, because the crypto world exaggerates headlines faster than almost anything online. There's no confirmed announcement proving XRP instantly replaced the global financial system overnight. There's no official statement guaranteeing XRP ETFs automatically send prices to impossible levels tomorrow. And this video is definitely not financial advice. But what we are going to discuss is why clearer crypto regulation, Senate discussions, ETF momentum, and institutional adoption conversations could potentially become one of the biggest turning points in modern crypto history, especially for XRP. Because honestly, for years, one of the biggest obstacles holding crypto adoption back wasn't technology. It was uncertainty. Regulatory uncertainty, institutional uncertainty, legal uncertainty. And uncertainty scares massive financial institutions more than almost anything else. Now think carefully about this. Large institutions manage enormous amounts of money. Pension funds, asset managers, banks, insurance companies, corporate treasury systems. Those institutions generally do not move aggressively into markets without clear regulatory frameworks. Why? Because institutions care about compliance, risk management, legal clarity, operational safety. That's critical to understand. And for years, the crypto industry operated inside massive uncertainty. Nobody fully understood which digital assets were securities, how tokenized systems would be regulated, how banks could safely integrate blockchain infrastructure, how institutions could offer crypto products legally. That uncertainty slowed institutional adoption dramatically. But now, the environment is changing. Governments globally are beginning to build actual digital asset frameworks, stablecoin regulations, tokenization policies, crypto market structure discussions, digital asset compliance systems, and in the United States specifically, political conversations surrounding crypto suddenly became far more important than most people expected. That's why Senate discussions and regulatory developments now create enormous attention across the crypto industry, because supporters believe clearer regulation could unlock the next major phase of institutional adoption. And XRP supporters believe Ripple may already be positioned directly inside that transformation. Now let's talk about why XRP communities became especially excited. Ripple spent years operating directly inside regulatory battles and institutional finance conversations. While much of the crypto industry focused mainly on retail hype cycles, Ripple focused on cross-border settlement, liquidity movement, financial interoperability, institutional infrastructure. Those are trillion-dollar financial conversations. And now suddenly, the financial world itself appears to be moving toward the exact areas Ripple spent years building around. That's why supporters believe regulatory clarity could potentially benefit XRP enormously long-term, because institutions generally move much faster once legal frameworks become clearer. Now let's talk about ETFs, because honestly, this may become one of the biggest catalysts for institutional crypto expansion moving forward. Most average investors still don't fully understand why ETFs matter so much psychologically and institutionally. ETFs make exposure easier, safer, more familiar for traditional finance. And institutional investors often prefer regulated financial products operating inside established frameworks. That's huge, because historically, easier institutional access often increases mainstream adoption significantly. Now again, balance matters, because social media instantly turns speculation into fake certainty. There's no guarantee every crypto ETF automatically succeeds. There's no certainty that institutions instantly pour trillions into XRP tomorrow. But what matters is the broader direction of the financial industry itself. And honestly, that direction increasingly appears more digital. Banks are integrating blockchain research. Governments are building digital asset regulations. Asset managers are exploring tokenization aggressively. Stablecoins are becoming infrastructure tools. And institutional finance globally is preparing for more digital ecosystems. That transformation is real. Now here's where things become even more interesting. Because tokenization itself may eventually become one of the largest financial revolutions of the modern era. Most people still don't fully understand how massive tokenization could eventually become globally. Imagine stocks moving digitally, real estate becoming tokenized worldwide, government bonds settling instantly, assets trading globally 24/7, programmable financial ecosystems operating automatically across borders. That future sounds futuristic today, but major institutions are actively preparing for it right now. Banks are modernizing infrastructure aggressively. Asset managers are investing billions into tokenized products. Governments are building digital finance regulations. And financial systems globally are evolving much faster than average people realize. Now think carefully about what happens if enormous amounts of tokenized value eventually move through digital ecosystems worldwide. Liquidity becomes critical. Settlement efficiency becomes essential. Interoperability between systems becomes incredibly valuable. That's exactly why XRP supporters believe Ripple's infrastructure could eventually become highly important long-term, because Ripple focused specifically on liquidity movement between systems. Now, another reason this entire Clarity Act narrative became emotionally explosive online is because many investors feel like crypto itself may finally be entering a more mature institutional phase. Back then, crypto is fake. Blockchain has no future. Digital assets will disappear. Today, governments are regulating crypto. Banks are integrating blockchain systems. Asset managers are tokenizing financial products. Institutional adoption is accelerating, and digital financial infrastructure is expanding globally. That's an enormous shift happening in real time. And XRP supporters believe Ripple may already be aligned directly with where institutional finance is heading next. Now, let's talk emotionally for a second, because honestly, this is why crypto communities remain so passionate during major regulatory moments. A lot of people today feel financially uncertain. Inflation continues hurting purchasing power. Debt levels remain enormous globally. Traditional savings feel weaker every year. And younger generations increasingly feel disconnected from traditional financial opportunities. That emotional pressure matters psychologically, because historically, periods of economic transition often accelerate interest in disruptive technologies promising transformation. People begin searching for future opportunities, emerging infrastructure, systems connected to where the world might eventually head next. That emotional reality fuels huge blockchain communities globally. And XRP specifically remains emotionally powerful because supporters believe Ripple focus on infrastructure instead of short-term hype cycles. Now, obviously, critics still raise legitimate concerns too. Competition remains intense. Stablecoins continue expanding rapidly. Governments may prioritize centralized digital currencies instead. Banks could develop private blockchain infrastructure, and regulations themselves may evolve unpredictably. Nobody knows exactly how the future unfolds. But one thing feels increasingly undeniable now. The financial world is transforming rapidly. Digital infrastructure is expanding globally. Institutional blockchain adoption is accelerating. Tokenization conversations are exploding worldwide. And XRP continues remaining directly connected to discussions surrounding liquidity movement, settlement modernization, and cross-border financial infrastructure. That's exactly why so many investors suddenly feel like regulatory clarity and Senate-level crypto discussions may have changed the future of digital assets forever. Because whether people fully realize it or not, the next generation of finance may already be entering the mainstream. Now here's where this entire situation starts becoming even bigger. Because once you really begin understanding how powerful regulation is inside global finance, you realize why so many investors suddenly believe the crypto industry may be approaching one of the most important turning points in its entire history. And honestly, this is no longer just about XRP anymore. This is about whether digital assets themselves are finally moving from speculation into legitimate global financial infrastructure. Because think carefully about how institutions operate. Large financial institutions do not move based only on hype. They move based on legal clarity, regulatory certainty, operational safety, infrastructure readiness, long-term scalability. That's critical to understand. And for years, one of the biggest obstacles preventing large-scale institutional crypto adoption was uncertainty. Nobody fully understood how governments would regulate digital assets. Nobody fully understood how tokenized systems would legally operate. Banks hesitated. Asset managers hesitated. Institutional investors hesitated because uncertainty creates risk, and giant institutions hate uncertainty. But now, governments globally are beginning to build actual frameworks around digital finance. That changes everything, because once regulations become clearer, institutional adoption can accelerate dramatically faster than most people expect. That's exactly why XRP supporters became so excited about Senate discussions, ETF momentum, and crypto legislation recently. Because supporters believe the industry may finally be entering its next phase of evolution. Now think carefully about this. A few years ago, mainstream finance openly mocked crypto. Blockchain has no utility. Digital assets are temporary. Crypto will disappear. Today, governments are building crypto regulations. Banks are integrating blockchain research. Stablecoins are becoming infrastructure tools. Asset managers are tokenizing products. And institutions globally are preparing for more digital financial ecosystems. That's an enormous transformation happening in real time. And XRP supporters believe Ripple may already be positioned directly inside where institutional finance is heading next. Now let's talk about Ripple specifically because honestly, this is where things become extremely interesting. Ripple spent years focusing on institutional infrastructure instead of retail hype cycles. Cross-border settlement, liquidity movement, financial interoperability, payment modernization. Those are trillion-dollar financial conversations. And now suddenly, the financial world itself appears to be moving toward the exact problems Ripple spent years trying to solve. That's why supporters believe clearer regulation could potentially unlock enormous institutional opportunities for XRP long-term, because institutions generally move much faster once legal frameworks become safer and more predictable. Now here's another massive reason this entire Clarity Act narrative exploded emotionally online: ETFs. And honestly, most average investors still don't fully understand how psychologically important ETFs are for mainstream finance. ETFs create familiarity. Traditional investors understand ETFs. Financial advisors understand ETFs. Institutions already operate heavily through ETF infrastructure. That matters enormously, because easier access often increases institutional participation dramatically. Now again, balance matters because social media instantly turns every headline into unrealistic expectations. There's no guarantee every ETF automatically succeeds. There is no certainty XRP instantly becomes the center of the financial universe tomorrow. But what matters is the broader direction of institutional finance itself. And honestly, that direction increasingly appears more digital every year. Banks are modernizing infrastructure aggressively. Governments are preparing digital finance regulations. Asset managers are exploring tokenization at massive scale. And blockchain technology is becoming increasingly integrated into institutional conversations globally. That transformation is real. Now let's talk about tokenization again, because honestly, this topic may completely reshape finance over the next decade. Most people still don't fully understand how enormous tokenization could eventually become worldwide. Imagine stocks settling instantly digitally, real estate becoming globally tradable, government bonds moving through blockchain systems, assets trading 24/7 worldwide, programmable financial ecosystems operating automatically across borders. That future sounds futuristic today, but major institutions are actively preparing for it right now. BlackRock openly discusses tokenization. Banks are modernizing settlement systems aggressively. Governments are developing digital finance frameworks. Financial infrastructure globally is evolving much faster than most people realize. Now think carefully about what happens if an enormous amount of tokenized value eventually move through digital ecosystems globally. Liquidity becomes one of the most important components of the entire system. Settlement efficiency becomes essential. Interoperability between systems becomes incredibly valuable. That's exactly why XRP supporters believe Ripple's infrastructure could eventually become highly important long-term, because Ripple focused specifically on liquidity movement between systems. Now, another fascinating part of this entire story is interoperability. And honestly, interoperability may become one of the most valuable components of future digital finance. Because even if governments launch separate digital currencies, even if banks create different blockchain systems, even if tokenized ecosystems expand globally, those systems still need efficient ways to communicate and move liquidity between each other. Without interoperability, digital finance becomes fragmented and inefficient. Ripple focused specifically on solving interoperability challenges between systems. That's one reason supporters believe Ripple could eventually become extremely valuable in future financial infrastructure. Now, let's talk emotionally for a second, because honestly, this is why XRP communities remain so passionate after all these years. A lot of people today feel financially exhausted. Inflation reduced purchasing power. Debt levels exploded globally. Housing became harder to afford. Traditional savings feel weaker every year. And meanwhile, giant institutions always seem to position themselves early before average investors fully understand what's happening. That frustration creates huge emotional energy around disruptive technologies connected to the future, because people desperately want to believe they still have a chance to participate early in the next major transformation before the system fully adapts. That emotional reality fuels massive blockchain communities worldwide, and XRP specifically remains emotionally powerful because supporters believe Ripple focus on infrastructure instead of short-term hype cycles. Now, another major factor driving excitement recently is political momentum itself, because crypto regulation is no longer a niche topic anymore. It became a national economic conversation. Governments understand digital finance matters strategically now. Financial competitiveness matters. Technological leadership matters. Infrastructure modernization matters. And countries globally are racing to avoid falling behind in the next digital financial era. That's exactly why Senate-level crypto discussions suddenly became so important psychologically, because supporters believe regulatory clarity may eventually unlock institutional adoption at a scale the market still doesn't fully understand yet. Now, obviously, critics still raise legitimate concerns too. Competition remains intense. Stablecoins continue expanding aggressively. Governments may prioritize centralized digital currencies instead. Banks could develop private blockchain infrastructure, and regulations themselves may evolve unpredictably. Nobody knows exactly how the future unfolds. But one thing feels increasingly undeniable now. The financial world is transforming rapidly. Digital infrastructure is expanding globally. Institutional blockchain adoption is accelerating. Tokenization conversations are exploding worldwide. And XRP continues remaining directly connected to discussions surrounding liquidity movement, settlement modernization, and cross-border interoperability. That's exactly why so many investors suddenly feel like the latest Senate discussions and regulatory momentum may have changed the future of crypto forever. Because whether people realize it or not, the next generation of finance may already be moving into position behind the scenes.